Welcome to the Alan Berry Reports TV show. I'm Alan Berry Laboucan. I'm the editor of the Alan Berry Reports and the host of this show. Thank you very much for joining us today. Today I'm going to talk about two topics. One is the diamonds, and then we're also going to talk about one of the diamond companies that we follow. There's a couple reasons that we follow diamonds so closely, and one of those reasons is that much like other commodities, we tend to follow those commodities to get an idea of what's happening economically and also what's happening with those specific commodities. And in the case of diamonds, diamonds can be a very good economic indicator when you're trying to assess what's going on with the high end of the economic food chain, if you will. And of late, diamonds have been under very strong demand. Back in 2008, when we had all the economic calamity, it really started to affect the supply chain, which had already gone through a couple decades of weakening, and what happened in 2008 there just made the supply chain even worse. And so now we're getting, we have a much weakened supply chain, and but we're getting some healthy demand. I have a couple of friends that are rough diamond dealers, and they've been telling me that the rough prices are extremely strong right now, and they feel a lot of that is coming from China and India, and probably also to a degree the oil states there. And so this is a good indication that you know, the upper end of the high end of the market in China is starting to consume diamonds, and globally. So these are some of the reasons that, you know, rough diamond prices have been doing very well. Now, the key reason that we follow diamonds is just like any other commodity. It comes down to supply and demand fundamentals. And as I said earlier, the supply has been flatlining for several years now. That hasn't really changed at all. In fact, it got a little bit worse since 2008 there. And then you've got strong demand, and so that's you know, a recipe for any commodity to go higher, and that's the key thing we focus on. But again, sometimes we can get some indications of what's going on economically with the diamond prices. Now, the company that I wanted to talk about, the diamond stock that I follow in our reports, is a company called Peregrine Diamonds. Before talking about Peregrine, I'd like to do the disclosure. We are shareholders of the company, and they are also a featured company and have been for several years in our email newsletter. So getting that out of the way, some of the reasons that we follow Peregrine Diamonds so closely is originally when we started following them, they were very busy at that time a few years ago with their project up in the Northwest Territories. It's in close proximity to two of the Canadian diamond mines up there, and they were doing a lot of work to test the economics of this project. And the economics were looking very good, and it looks like there's a good potential that in the future that kimberlite that they have up there called DO27 could be a future diamond producer in Canada. But in the last couple years, they've really been putting most of their focus on their exploration out in Baffin Island. And part of the reason for that is they went in there a couple seasons ago, and they had some really good success. They found kimberlites. They had that drill core from those kimberlites. Kimberlite is the host rock of what brings diamonds to the surface. And so they found a kimberlite. They had done a bunch of the testing of the drill core, and it came back very favorable. And around that same time, they've got a partner on this project, BHP, and BHP Billiton, and BHP had an option to a back-in right on the project, but they had to spend about, I think, $23 million to earn back that interest in the project, so they actually, after seeing the first year's worth of results, they had a longer time frame to decide to back into that, exercise those back-in rights, and they actually jumped ahead of the schedule. So this is also a pretty good indication of the realistic potential of the project. Last season, they went in and done a whole bunch more exploration work, and again, they had another very successful year finding kimberlites. And what was most exciting about those kimberlites, one of the key things that a couple of key things that you can look for to give you an idea of what the diamond grade of a kimberlite is you can get an indication of that potential based on diamond indicator minerals. There's certain kinds of diamond indicator minerals. I don't want to get too technical, but there's certain kinds of indicator minerals that are known to be associated with diamond mines. And then the best indicator obviously is diamonds. And when you're looking at diamond results, you're looking for certain things in what's called the diamond distribution curve. And when you get the right kind of diamond indicator minerals and you get the right kind of diamonds in an area, you start to see certain trends that give you an indication of what can come out in grade potential on those kimberlites. And in the case of what Peregrine has found, they're getting the right kind of diamond indicator minerals and the right kind of diamonds that suggest that these kimberlites they found already have the potential of having very good grades. In fact, the results from the indicator mineral work and the diamond distribution curves suggest that these are in line with some of the best results that we seen in the kimberlites that were found in the Northwest Territories that ultimately became diamond mines. And so this is probably the most important Canadian diamond discovery in a decade. And so Peregrine Diamonds, in addition to having an outstanding project, they also have outstanding people involved running the company. Eric Friedland is the leader of the company, and he's had a long career in the mining exploration business. They've also got some key technical people. One of the chaps was formerly with De Beers. So they've got a really strong project. They've got a really strong team, and we recommend you take a look at the company and do your own homework, and you'll see why we like them so much. Before closing, we'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own homework and consult with speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and if you'd like to help us out, below the screen you'll see some share buttons that will help you pass directions to how to find the show onto your friends that follow the markets, and you can do that by Twitter or Facebook or email. We really appreciate you taking the time to watch the show. We're well aware that everybody is busy these days, and we strive to produce a show that saves you time and gives you helpful, high-quality information. We hope you can join us for future shows or visit us on our website at allenberryreports.com. All of our past shows are at our youtube.com/allenberryreports, and we invite you to have a look at all those past shows. Have a great day.